welcome to this Money Control live stream. You're watching Morning Trade this Saturday morning. Of course, it's a good change to be in the studios on a Saturday morning. Monday will be a trading holiday. And as we know, today we will be having a full trading day from 9:15 a.m. to 3:30 p.m. So all of us here at work, as it is a regular trading day. But of course, if you look at the GIFT Nifty, positive cues coming in out of there. 21,700 is where GIFT Nifty is at, and looks like we are in to reclaim that particular level as well. But lots of big numbers to digest, Reliance Industries, HUL, and lots of numbers to watch out for as well, the likes of ICICI Bank, Kotak Bank that will be reporting numbers today. And of course, keep your queries coming in, given the fact that we will be taking them up with our technical expert on the show. So, have any queries, send them in to us on our YouTube feed, which is live at the current juncture. But before we move any further and take stock of all the stocks that will be in the limelight today, let's take a look at the top headlines at this hour. Well, Indian markets to have a full trading session from 9:15 a.m. to 3:30 p.m. today. The equity market, however, will remain shut on Monday. Now, the decision has come ahead of the Ram Temple Pran Pratishtha ceremony in Ayodhya on Monday. But if you look at the cues today, GIFT Nifty giving out positive signals this morning. Strong close for Wall Street as S&P 500 ends at all-time high, led by semiconductor and mega cap shares. All three major averages are now in the positive territory for 2024, with the Dow going green during Friday's rally. Reliance Industries beats third quarter estimates. Strong show led by retail, geo and oil and gas businesses. In fact, it's a stellar show from the retail arm, highest ever quarterly revenue clocked in that particular segment. Among other earnings, HUL disappoints as volumes come in flat at 2% vis-a-vis previous quarter. Margins too miss expectations. Meanwhile, Paytm has narrowed its Q3 loss on a YOY basis. Among big earnings today, ICICI Bank may report strong loan growth, but margins may come under pressure. For Kotak Bank, deposit growth is likely to be healthy, while asset quality is also expected to improve. Let me bring on board then our technical expert for today. Joining me is Rohan Shah, who's the technical analyst at Religare Broking. Well, great to have you on the show, Rohan. Looking at the GIFT Nifty, the setup looks positive, but today we'll be having expiry for the mid-cap index as well as BankX as well, right? Being shifted to Saturday since Monday is a holiday. So how do you expect that expiry to pan out? And particularly for the Nifty Bank index as well, what would be the kind of levels you'll be watching out for, given the fact that, any attempt at a recovery yesterday was, feeble, so to say, and we ended the Nifty Bank index at least in the red for the day.
Good morning, Nandita, and thank you for having me on the show. So yes, it's a Saturday, and this is like a very, you can say very rare. We can see the Saturdays working. So on the Bank Nifty side, we are expecting like 45,300 is the level to watch out for in the near term. So till the time we are holding this level 45,300, 45,350, we can see some breather on the higher side, making an attempt to cross 46,000 in the near term. And the 46,350 to 500 is the level what we should watch out for, because it is the short-term moving average and its previous resistance zone. So on the positional front, we are expecting 46,300 to 46,500 is the strong resistance, strong hurdle for the Bank Nifty. And on the downside, till the time 45,350, 300 zone is held, we can expect some breather on the higher side. And also, I would like to add on the Nifty side. So as we have seen that quite a sharp reaction from the record high levels. And on the technical front, it has formed, we can say, a bearish island formation, which has a bearish implication. And at the same time, if we look at the seasonality point of view, so basically adding the data of like 20 to 25 years, generally we have seen January and February are the months where we expect softness in the market. We are like bulls doesn't have the favor in the indication. So we are also cautious at this point of time. So till the time 21,829 or 21,900 is the very strong resistance area. Till the time we are not crossing this area, we are expecting a pullback towards 21,400 and 21,200. So yes, these are the levels one can watch out for in Nifty and Bank Nifty going forward.
All right, that's the view then. Those are the levels to watch out for on the Nifty and the Nifty Bank index as well. But hold that thought, Rohan. We'll come back and discuss other specific stocks and take up viewer queries as well with you. But also, let me bring on board our next guest for today. Joining me is Mayuresh Joshi, who's the head of equity research at William O'Neill India. Mayuresh, first of all, how does it feel? Saturday morning and we are here as if it's a regular day. Of course, it is a regular day, 9:15 a.m. to 3:30 p.m. What's the feeling like? All the weekend plans have gone all right?
Yes, they have, but I think it's okay. I think we'll adjust that on the Monday.
Right. I want to get your thoughts on Reliance Industries, given the fact that numbers have come in pretty strong. Look at Jio, look at retail, even the oil and gas business. All these businesses have been firing up the numbers, right? So, given the fact that Reliance Industries has started performing, if you look at the last 1,000-point rally from 21,000 to 22,000, the biggest contributor there was Reliance Industries. Now, looking at the numbers, do you think the outperformance has just about started and there could be much more legs ahead going forward to this particular rally?
So, morning, Nandita. Absolutely a possibility. I think most of the legs that Reliance's rally had been working on are moving in the right direction. Reliance Retail, I think the performance just continues quarter after quarter. Imagine a 10 billion revenue company as we speak. They've opened 252 odd stores. Just put it in context, right? Just in one quarter, DMart has a total of around 350 odd stores. So the kind of reach and the bandwidth that Reliance Retail is probably expected to achieve over the next few quarters can be overwhelming the retail industry itself. Jio ARPU numbers might be a little bit disappointing, but the whole expectations now built in that over the next few months and probably in this calendar year, the telecom industry overall will go through an ARPU increase. And if that probably happens, the standalone Jio numbers should show steady state improvement going forward. The upstream business has shown good resilience, better output from KGD6. And therefore, the oil and gas business has shown tremendous amount of growth in the previous few quarters. O2C expected to be a little weak, but the performance was a little bit better off. And the refining business itself, the margins should show steady state improvement as well, as Reliance has different feedstock options. Obviously, there were a few issues at hand. There was a maintenance shutdown as well as the cracks, the lower product prices in diesel and the Russian crude obviously impacted that. But I think still a relatively better performance compared to how the GRMs fared. Going forward, obviously, I think the new businesses is something that is going to be a big trigger for the stock as well. And with the assumptions of the capex that they're putting in, obviously a calibrated manner over the next few years. As the revenue start trickling in and as the output starts coming on board as well, I think that's going to be a huge value differentiator. With Reliance obviously stating also that the leverage factor will not exceed the limits that they've probably set, which means that the ROEs should also show steady state improvement. So yeah, we remain optimistic on the start on a Markets with India lens. The EPS rating is excellent for Reliance as we speak, and it's trading above its key pivot level. So yeah, I think the optimism for Reliance continues at our end from a medium term.
All right, the optimism on Reliance Industries continues, but in a starkly opposite kind of a scenario, HUL has disappointed street even on the margins front, where it was expected to be better than last quarter, but that has not happened. Volumes have been muted 2%. That was the same scenario last quarter as well. The underperformance in HUL is pretty much visible. In fact, Morgan Stanley has also pointed out that earnings have been below estimates for a fourth quarter in a row. Given the fact that rural recovery is still not really in sight, do you think the pain will continue for some of these FMCG companies, because numbers wise nothing great expected any which ways?
Yeah, it might, and I think the next trigger for these stocks is going to be how the monsoons fare in the next season itself. So I think if the monsoons are better off, which I hope they are, fingers crossed for that. The recovery will start in the first half and a full-fledged recovery in the second half. Obviously, I think the variables that FMCG companies work on is how the volumes probably play out. And volumes, because of all these factors, higher inflation, lower discretionary spending, and the rural is a big component in terms of FMCG volume sales. So if you look at the different SKUs that they've probably got for different markets, rural contributes one of the biggest in terms of volume. And therefore, if rural is struggling and is expected to improve only after a couple of quarters to show the initial signs thereof, I think the recovery itself gets delayed by a couple of quarters as well. Obviously, I think the government is doing a lot of measures at their end in terms of MSP increases, so on and so forth. But for a genuine recovery to come, I think a couple of quarters and the assumption of normal monsoons is something that one really needs to look at. Obviously, I think the value part when it comes to FMCG companies as well, in such scenarios where they need to push volumes through, the grammage increases. At the same time, you're probably also expected to see some elements in terms of push-throughs happening in terms of ad spends, as well as some price cuts coming through to induce demand. And that probably takes a toll on the EBITDA margins as well. Most of the stocks trading at all-time highs as we speak in last 1 year, and valuations are no longer cheap for the sector as a whole. So yeah, I think this sector can be best a market performer or might even underperform over the next couple of months.
All right, expect underperformance to continue for some of these FMCG names. But, shifting focus to a Paytm, losses have been narrowed on a YOY basis. Even the EBITDA loss has been narrowed, right? And recently we had UBS initiating coverage on this particular stock. And, they have mentioned that the payments business, the strength in the payments business will drive growth going forward, and they also expect the company to achieve EBITDA break even in FY25, right? So there was a hiccup, of course, with respect to the low ticket loans, right? But do you think that has been taken in stride, and it's the payments business that would continue to, or that would drive a re-rating on this stock? Do you think the worst is behind when it comes to the stock price at least?
Probably. But Nandita, I think the payments business is something which has always been the core for Paytm. Obviously, the other businesses that they ventured into was a value-added proposition that came through, and that probably drove some element of growth when it came to the overall transaction value that Paytm delivered over the past few quarters. So I think that adjustment will obviously happen in lieu of the RBI circular, and that will take a toll in terms of the other business numbers as well. But the core business is expected to improve in a very stable fashion over the next few quarters. And therefore, the large expectations that the market has laid out in terms of a break-even in FY25 is what thesis is getting played out in terms of price. Now, a couple of quarters here and there, and you will see adverse reactions coming through as well. So I think Paytm has to consistently deliver on its numbers, show improvement every passing quarter to have the street convinced that FY25 is the year as we get into the next few quarters that the break-even will be achieved on its core business as well. And as that probably happens, I think you will see gradual easing happening in the stock as well.
All right, that's the view on Paytm. But with that, I'm afraid we are running out of time. Mayuresh, I would like to thank you for taking out time and joining in this morning and sharing your thoughts with us. Wish you a good weekend. Of course, after 3:30 p.m., that's when the weekend starts. So wish you a good one.
Thanks, Nandita. Pleasure to be on your show as always. And wish you a good weekend as well.
Thank you. Thanks a lot. Well, with that, let me get back to Rohan and talk about other stocks that will be in focus today. RBL Bank, yesterday the stock plummeted 3% or thereabouts. Of course, slippages have increased on a quarter-on-quarter basis. Perhaps that is the one, factor that, of course, could lead to more weakness on the stock price as well. But on the charts, over the last 5 days, we've seen an 11% kind of a downtick coming in on this particular stock. So particularly for today, what kind of support levels should one be watching out for on this particular counter?
So yes, if we look at the daily chart, the stock has been improving its trend and has been forming a base pattern. So in the very near term, the stock has a strong support place around 260 to 255 zone, which coincides with its previous resistance zone and long-term moving average. So yes, in the near term, 255 is a level to watch out for. If that support is hold, we can see some recovery in the stock, where stock moving higher towards 275 to 288 levels. So yes, anyone holding this stock, 255 is the level to watch out for, and this is the stop loss can be placed.
All right, that's the view on RBL Bank. But let's take up some viewer queries that are trickling in. Abhinav Sharma wants to know your thoughts on, RVNL. I think the stock of the moment, given the fact that yesterday again it clocked in a 20% rally, and in the last 5 days it has gained somewhere around 41%. Is there a ceiling? Can you spot higher targets on the stock, or do you think it's already in overbought zone now?
So yes, as rightly said, the railway stock has been bursting quite sharply in the last few weeks. And looking at the RVNL, just take an example of RSI, it's quoting above 95, which is very, we can say, overbought territory. So in this case, one can do one thing we can place a stop loss, trailing stop loss if anyone is holding the position. So in this case, 275 is the level where one can place a trailing stop loss. And of course, looking at the risk reward perspective, fresh entry cannot be placed at the current market price. So any dip towards, towards 250, 255 is the zone where we have a support of short-term moving average. So this is the area where we can place a fresh buying opportunity around this level. But definitely at this point of time, trailing stop loss can be placed and fresh buying should be avoided.
All right, avoid fresh buying. That's the view. Hope that answers your query. The next query is coming in on a Nestle from Yagnesh. Wants to know that this particular stock has been consolidating with negative bias since the stock split. So could you tell us the levels that you'll be watching out for on this particular stock, both for the near term as well as the medium term?
Yeah, it's rightly said. Currently, the stock has placed over a very strong support area, that is 2500, which is its short-term moving average and its previous resistance zone. So till the time 2500 is hold, we can see some recovery, stock moving higher towards 2600, 2620 levels. But in case if the stock plunge below 2500, we can see further selling. Further selling towards 2450, 2420 is the next level to watch out for. So anyone holding this position, do keep a strict stop below 2500.
All right, those are the levels to watch out for. Hope that answers your query. But there's another query coming in from Manisha. In fact, wants to know your thoughts on an LIC. Now, this stock cleared that 900 rupee mark as well. Briefly, it became the most valuable PSU as well, right? But here on levels of 1000 possible sometime soon, maybe a couple of months.
So yes, if you look at the chart, definitely I am also expecting a 4-figure digit in this counter. So once the 1000 level is breached, it will open a further up move towards, and gradually it may also move higher towards 1075, 1080 odd levels. So yes, in the near term we can expect 1000, and any sustenance above 1000 level, it will open the way for 1080 to of course 1200 levels in coming months to come. So this is definitely one stock which should keep on the radar.
All right, keep LIC on your radar, and those are the levels to watch out for. Hope that answers your query. The next query is coming in from Arvind on a Rajes Exports. Yesterday the stock managed to hold out 2% or thereabouts, but over the last 1 month hasn't really fired up much. For somebody who's holding this counter, should they stick to it, or should they look to kind of exit at the current juncture, because the stock has come off quite a bit from 52-week highs?
So yes, like this is one of the stock which has of course not participated in the market rally, and looking at the last few weeks of price action, the stock has clearly formed a bearish flag pattern. So I would advise, if anyone holding this position, it's better to exit from this counter at current market price and move to the better counter which are trading relatively higher. So yes, it's better to book the losses in this counter and move to the better stocks which are doing well.
Right. Another query coming in on Ultratech Cement from Udesh wants to know whether or not one can take new position in this stock. Good set of numbers, and the stock was holding up yesterday 2.5% or thereabouts. But do you think at the current juncture should one invest, or should they wait it out for a bit of correction?
So yes, definitely the stock on the higher time frame is quite strong, and after recently forming a all-time high like around 10,500, the stock has reacted a bit lower. But looking at the price action, the stock has given a breakout from a small base formation. So yes, definitely one can attempt a fresh buying opportunity at this current market price, maintaining a immediate target of 10,600, and a stop loss can be placed below 9,800 levels.
Right, those are the levels to watch. But talk about Pradeep Phosphate, right? We have a query coming in on this stock from Raj Karnawat, and he wants to know whether one should look at this particular stock at the current juncture or not. Has been in a downtrend. The up move that it saw over the last 1 month has kind of fizzled out a bit, quoting at 75.9, which is not very far from 52-week highs. So what should the strategy be here on this particular stock?
So yes, if you look at the weekly chart, the stock has beautifully formed a volatility contraction pattern, and recently it has given a breakout from the same. So yes, this is one counter which should be on the buy list. Any dip towards 74, 73 can be a good buying opportunity. Maintaining a stop at 70, and in the near term, the target can be placed at 82. But looking at the formation on the higher time frame chart, the stock also has a potential to move towards 98 to 100 levels in coming weeks to come. So definitely on the short term as well as on the positional front, this stock can be kept on the buying on the buy side.
All right. Once again, shifting focus to the large cap private names like ICICI, which will be reporting numbers today. Loan growth is expected to be strong, but margins could come under slight pressure. As deposits get repriced, provisions and slippages may also rise, which has also been a concern with RBL Bank as well. Right? We spoke about it, but particularly for the likes of ICICI Bank and Kotak Bank, which are reporting numbers today, I think ICICI will be reporting post market. So ahead of numbers, is there any intraday strategy that you would like to suggest on these particular stocks?
So for intraday basis, I think we are not much bullish on the bank Nifty. So we are looking at, first of all, in the ICICI Bank, very strong resistance placed around 1010 odd levels. So in case if the stock breaches this mark, then we can see some upward momentum taking stock towards 1030, 1035. So as of now, wait for a breakout about 1000 for a fresh buying position. And in case if we see a decline towards 960, 965 levels, which is long-term moving average, we can see further downside in this stock. So as of now, it's a wait and watch. Wait for a breakout on the higher side to create a fresh buying position. And in case if anyone is holding the position, 975 is a stop loss which can be placed in ICICI Bank.
All right, that's the view then. But what about a Z? The stock continues to be volatile. Of course, the street is waiting for some color on the merger with Sony, and that the news could come out any time now. Within a couple of days, so to say. But for somebody who is holding on to shares of Z, should they just wait it out and wait for the whole merger news to settle and then take a call as to what needs to be done, or should they just exit?
No, one should hold the position. So if you look at the weekly chart or the daily chart, after a sharp up move towards from 175 to 280 odd levels, the stock has been trading in a very defined range, that is 280, 295 on the higher side, and on the downside 225, 220. So at the current market price, it's currently quoting around the lower band of the range. So keeping a stop below 220, one can hold the position. And in case we are seeing a recovery from 220, 225 levels, I expect 255, 260 is the next level to watch out for on the higher side. And this is the area where one can look to exit from this counter.
All right, but a couple of mid-cap IT names, I want to get your thoughts on an LTI Mindtree which reacted sharply to its numbers and fell by 10 to 11% earlier in the week, and Persistent System also in focus given the fact that the company will be considering a stock split along with its earnings. Entire mid-cap IT space, would you say that now the risk-reward is actually favorable for large-cap IT vis-a-vis some of these mid-cap names?
So yes, specifically if you talk about the LTI Mindtree, and if you look at the technical on the higher time frame charts, 5500 is a very important support for the stock. And if we see the daily chart, the stock has reacted positively from that mark. So 5500 is the level where one can place the stop loss for short term. And if the support is hold, of course, we can see a move towards 6000, 6200 in coming weeks.
Right, that's the view on LTI Mindtree and of course some of the mid cap names. But what about a Tata Steel? This stock will be in focus today. Yesterday it was up 2.5% or thereabouts, and today we have a query coming in from Sai Reddy. Wants to understand your thoughts. So what would your short and medium term view be on this stock?
Tata Steel definitely is a buy candidate looking at the long-term charts. So one can attempt a fresh buy at current market price as well, maintaining a stop at 128, and the upside target can be placed around 145 to 150 in the near term. And on the medium-term time frame, also it is a strong buy candidate. As we can see, the stock is holding its long-term and short-term moving averages. So given the time frame, it's 6 to 8 months. The stock has a potential to take out its all-time high levels, which is around currently quoting around 150 mark. So from a positional point of view also, and from the short-term perspective also, this is a buy candidate, and definitely one can enter in this stock.
All right, Tata Steel a clear buy, but last few questions really. What about the Polycab? After tanking 20% or so, the stock has been attempting to make comebacks. So somebody who's already holding positions in this stock, do you think it's a good time to average? Given the fact that it has been attempting to make recoveries as well. So going forward, what do you think people who are already invested in the stock should do?
So basically, the main point of concern is the stock has formed a very wide gap area, and from last 2 days, the stock has been consistently finding the resistance around that zone. So as of now, of course, I will not advise to average this counter, but you can maintain a stop at 4200 odd levels. So this is the very important support for the stock. So till the time 4200 is held, we can see a further recovery towards 4900, 4800 levels. So as of now, wait for, you can of course keep a stop loss of 4200 and hold the position. And any bounce towards 4800, 4900 is a very strong resistance area for the stock. So this is the time where one can look to exit or look at the investment position in this counter.
All right. Of course, don't look to average at the current juncture. That's the view here. But I want to take up your view on some of the brokerage stocks like 5 Paisa. You had AngelOne as well. 5 Paisa, of course, has given a good 27 to 30% kind of returns over the last 1 month, and over the last 6 months, it has given returns of somewhere around 60% or thereabouts. But for AngelOne, reacted sharply to its earnings, fell quite a bit. So some of these brokerage stocks, how are they looking like to you?
So talking specifically about the AngelOne, the stock has reacted very sharply from all-time high levels, and it has formed an exhaustion gap, what we can see in the technical term. So as of now, it's not a good buying strategy at its current market price. So wait for a dip towards 3000, 3100 levels, where we are seeing a multiple support on the daily and as well as on the weekly time frame chart. So wait for a dip towards 3100, 3000 level, where we can justify the stop risk reward favorability. So as of now, avoid this stock.
All right, that's the view then. Avoid AngelOne at the current juncture. But with that, Rohan, we have come to the end of the query segment. But before I let you go, leave us with your stock recommendations for today.
So yes, of course, the market has been like in a sideways or a consolidation from negative bias, but there are few pockets definitely from the defensive space, like Zydus Life is the one stock which we like. So the three ideas for the day: first one is Zydus Life. One can take a fresh position at current market price for an upside target of 765, and the stop loss can be placed below 700. The second stock which we like for today is RECL Limited. So one can take a fresh position at current market price for an upside target of 470, and stop loss can be placed below 440 odd levels. And the last stock, once the stock can be kept on radar, is GAIL India, GAIL, for an upside target of 175, and 164 is the stop loss level one should place in this counter.
All right, those were the recommendations coming in from Rohan. With that, Rohan, thanks a lot for taking out time and joining in this morning, this Saturday morning, so to say. Weekend's coming late. I'm sure you're looking forward to it. Have a good one. Post 3:30 p.m. That's when our weekend starts, right?
Thank you. Wish you the same.
Thanks a lot. Well, with that, completely timed out on this edition of Morning Trade. Thanks a lot for tuning in. Wish everybody a very happy weekend. It's coming in late, but I'm sure that's what makes it even more better. But of course, thanks a lot for tuning in. Stay tuned to Money Control. Coming up next is Opening Bell.